Retiring and beyond. 5.3. What? I'm not invincible? Oh, you're probably really aware of this by now. Odds are you're starting to look at this and say, I know some people who are dying. That sucks. And it's messier than I thought it would be. And it's more expensive than I thought it would be. Three types of life insurance: there's term insurance, there's universal life insurance, and there's whole life insurance with participating insurance options. Term insurance is usually for people under 52. If you are in your 50s and looking at term insurance, get off your butt, get it done now, and get it done for the term that you're going to need, because you're probably not going to want to revisit this conversation. The prices start to go up from here. 52, 53, 54. People I have experienced purchasing insurance, term insurance over 54, they do sticker shock. They don't like the price. Now, sometimes you need it. You still get your bang for your buck on the mortality gain. That means you're going to get more out of it, tax-free on death, than you put into it. That's good. But if you're buying term insurance at this age, I'm sorry, the odds are still reasonable that you're not going to claim on it and you're going to put a lot of money into it. So term insurance, probably not what we're looking at or recommending at this age. Talk to a professional though. They'll assess your situation personally, do a needs analysis, and have the conversation. Universal life, probably not my recommendation at this age either. Universal life requires sophistication, monitoring, and professional assistance. As you're going into retirement, we're trying to streamline, make things easier, help you be free and enjoy life, and then plan for the possible, well, I'm so sorry to say it, but declining of your capacity, because that seems to be just kind of how things go in our world, because you continue living long past where we used to. Average age of passing away is 83 and 84. If you've already made it to retirement, probably you're not going to be passing away at 83 or 84 or earlier. I mean, you might be one of the people who are, but you've already made it that far. Law of averages. You could quite possibly have a decline in capacity. So to have a complex solution introduced at this age, again, if your professional recommends it for a very specific reason, it can have a place, but likely not what you're looking at. Participating insurance, however, if you can afford it, is most likely what's on your docket right now, because you're starting to think about your final expenses, your final tax return, what your family impact is going to be. Do you want to leave a legacy? Do you want to give inheritances to people? And a participating policy grows in value, so you don't have to worry about inflation eroding its value. And if you set it up right, at some point you should be able to stop paying the premiums. You can even have a policy that you only pay for 10 premiums. You don't pay another dime into it, and it stays in place till death do you part, and will continue to grow. These are nice solutions that are really reliable, pretty trouble-free. And do you really want to book into a lot of premiums on your retirement income? And a lot of people don't. They want to use that retirement income for other purposes. Now, if you're considering insurance at this point, you've already considered that and you're allocating some premiums to that. Have that in mind when you talk to your professional, because if you know your premium range coming in, they're better going to be able to find the solution that's the right fit for you to accomplish what you want to accomplish, when you want to accomplish, how you want to accomplish, and the range you want to accomplish. Also, do some thinking about your beneficiaries. In retirement, if you pass away before you expect to, how do you want things tidied up? Where do you want your assets to go? Are you being tax efficient? And if you live to the very end of your life, same questions apply. What do you think might change between those two things? Flexibility is key here, because as I've said, I've noticed with so many of my retirees that perspectives and opinions and things start to shift after 65. Life experience changes. Your wisdom and how you perceive people changes. Your interactions with things change. So try for flexibility, work with a professional, and try to have two frames in mind. If I pass away earlier, And if I pass away later, I want something that's going to solve for both.